Hello and welcome to today's ASX Investment Opportunities in Review. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Up on screens, the performance of the ASX 100 model portfolio. This is based around the buy side of our algorithm and exiting the trade on the first sell signal. The average 5-year returns running at 18.83%, and part of today's presentation will be looking at the stocks that are currently in the portfolio. Okay, so moving straight on to the offer that we provide, the technology that I present today with the charts and the signals. You can subscribe to that for $1,320 and that covers 12 months access. If you'd like to know more about that, call our office on 1300 614 002. Moving straight into a graph of the XJO. So the market's had a little more than a 10% correction from peak to trough. We've recovered roughly around 200 odd points from the low. The expectation is that around 5,700 is support and around 6,100 for the index is resistance. So it looks like there's a little more upside in the market, but probably not too much above that 6,100. We think the market mostly consolidates and moves sideways. In today's recording, I'm going to take a slightly different approach, whereas in the past we've looked at the notes and the at the end of the recording. I'm just going to bring these into screen so you can see what I'm working off. And this is provided in the replay recording that's emailed out to you. If you just have a look this afternoon, below the replay button is a link to these notes, and you may want to use these as a reference point for what it is that we're looking at. So I've just started building notes around the US stocks. So if just have a look at these particular codes here. They're ones that are of interest. So these ones we've already added into our portfolio. Wins on the watch list. Just started buying Electronic Arts, and these other ones here are from the prior weeks, but mostly doing well. This one, Dow DuPont's up from 54, traded almost $60. Walmart's up at 100. Intel rallied from 42 to 46. Microsoft's about the same price, and EA's just in our buy zone at the moment. And Win, I think sub $100. That's looking interesting. So we've just got that on the watch at the moment. So what I'm going to do next is we're going to go in through these notes. We'll start to clear some of these out where the positions have either moved into our targets, but we'll start to sort of build up a more consolidated list of stocks to look at. So just moving through these. Brambles we had as a buy. Flight Centre is oversold. Car, we questioned the growth there, but I think that's now looking interesting. Seek, I think, is oversold, looking interesting. Aristocrat Leisure, I think that should find support. CWY, which is clean away. I've highlighted that analysts like that name at $18. AGL looks oversold. GPT's pretty much hit our target, so it's traded from 490 up to say 535. So I think it's either take profit or sell calls at the moment. Hack is that ETF, which we'll look at that. IAG's rallied from 7 to 7 sort of 25, but eventually we see that over 750. Iris was oversold. That's rallied from 11 back to 1150, and I think that's probably something you close out. That was not really a strong fundamental trade there. It was simply just oversold. Macquarie off the Algo signal, that's done well. Wesfarmers, so that pulled into our 46 price target, now trading about 47. That's one that I've chatted about selling covered calls to enhance the income. BRG, we'll revisit that today. Oil Search has gone onto the high conviction list at 750. That was good value. Santos, I think, is looking oversold. Woodside, we'll have a closer look at that today. Crown looks oversold. We'll look at that further today. Sydney Airport found support. That's pushing up to around 655. Evolution, we've traded in and out of this a couple of times, but it's back on the list at buying at 305. And ResMed, we've started taking profit up there at around $15 or $14.75 in that. QBE, we're going to watch for the next buy signal. Some of these yield names we'll look at today, and then some of these high conviction names. So the point of note this morning is we've taken profit on HealthScope. They've had a revised takeover bid at $2.44 by Brookfield, so the stock's trading $2.35, $2.38. So most of that gains, I think, there to be taken now rather than sort of get locked up in the takeover process. And then these high convictions. So what I'll do next is we'll have a look at the charts of some of these, and then at the end of the recording, what I want to do is toggle through the stocks that are currently in the ASX 100 model portfolio at the moment. So that list that I just had on screen, what we're going to do now is just start going through each of the relevant stocks and just remind you what it is that we're attracted to. So Brambles, I like this at 10.50. They've got the upcoming spin-off of the plastic pallet pooling business, and we're starting to see a gradual turnaround from contracting profits into slight expanding profits. The stock is expensive, 16 times earnings, but I think you're looking at support there at 10.50, so we like that, and mainly as a covered call strategy. So I think it could trade back up above $11. Flight Centre, I think keep this one on your notes there. I think at $45, that's starting to look oversold. Car, so this one we've been patient. We actually haven't purchased shares in this yet, but given today's weakness, if we were to see this down, say sub 11.50, and I'm going to add this to the notes now because I think at sub 11.50 it really is attractive from a valuation standpoint. So I'm going to add 11.50 as a buy there. And I'll just say value is now on offer in the notes. So that's Car. Seek, we've started buying this. I think you might have to be a little bit patient through to the next earnings result, but I think you'll start to see 10 to 20% earnings growth come through from Seek, which supports a higher share price. Aristocrat Leisure. A lot of analysts have price targets up to $42 here on Aristocrat. Its competitor in the US just announced some of its results around sort of the electronic or computerized gaming side of the business, pokie machines and the like, which should flow through to good results for Aristocrat. I think one of the concerns here is we are seeing slightly weaker data in Macau and in Vegas, which may have some sort of impact on forward orders for Aristocrat Leisure. But it is interesting just how bullish analysts are on this one. So I think we recognise that historical algorithm buy signals have performed very well here. The stock's making a good structural higher low formation, but you maybe just think about running a stop loss below 25.50. CWY. So again, what I'm doing here is just working through the list of notes and under the general section that are available at the end of this webinar. So Cleanaway, I don't get too excited about this because there's no call options over it, but I do point out that a lot of analysts have added it into their model portfolios, and it is under algorithm buy signals here at around 170. AGL, I think this is oversold at $18. I appreciate these retail electricity businesses are a little bit out of favour at the moment, given the regulations that the government's trying to look at capping prices within the industry, but it may be at $18. It's just a bit too oversold, AGL. GPT, that strategy's really played out there, so I think that's after the earnings upgrade that the company had. This 530 to 540 looks full value to me. This Hack ETF, I've raised that before. We haven't purchased this yet, but just highlighting that after the sell-off from 750, it pulled back into exactly sort of 50% of that value range there at 625, pushed back up to 675. Maybe if you see it retest that 625, might be one worth thinking about. I think there's it's a pretty strong argument that long-term fundamentals support the companies within that ETF. Uh, IAG, which is, we're always attracted to this given that Warren Buffett took an equity stake in the company. It's the only company in Australia Berkshire Hathaway's ever taken an equity stake in. They are rationalising their portfolio, selling down some of their Asian assets, returning capital to shareholders. We just saw 19.5 cents special dividend to shareholders only a few weeks ago, or capital return. There's another 5.5 cents special dividend in the first quarter of the new year. At around 750 to 775, the stock starts to look full value, but I think there's an opportunity there in IAG. Iris, this is one that I track just as a oversold level down here at 1050. I don't get excited about it from a fundamental standpoint. There's a price gap up to around 1180, but I think that's one that we now take off the list and say that that's pretty much done, that trade. So I'm going to cut that from the notes, and we'll add that into the closed positions, as I don't think we need to. I don't think there's a compelling enough opportunity there to buy that to keep that on the list at the moment. Okay, so that's Macquarie Group. So let's have a quick look at this. Unfortunately, for the most part, we missed the opportunity here, but the algorithm buy signal did a good job of picking up the higher low formation. The stock's rallied from 110 up to 120. Macquarie's gone from delivering around $2.2 billion of profit to forecast growth of around $2.6 billion. So at the higher end of market consensus there, that's helping to underpin that push higher. Maybe it's somewhat of a worry, Goldman Sachs. So I'll bring up a chart of Goldman Sachs just so you can see what I'm referring to here. That probably there's similarities between Macquarie and Goldman Sachs. In the US here, Goldman's is under lower lows, lower highs. We've had a sell signal there at around 250, another sell signal at 234. What I might do is just put in a trend line here, or a resistance line through there, and we'll keep an eye on that. But whilst Goldman's is in this type of pattern, I actually find it pretty hard to get excited about Macquarie. So my preference is probably to buy Goldman's at the on the next algorithm buy signal. All right, so moving on from that, Wesfarmers was next on the notes. So we had this as a buy down here at around this sort of $45 to $46 level. We've added exposure to it. It's pushing back up to around 47. You've got the spin-off of Coles. I think the vote on that might be actually this week or next week, and we'd expect to see Coles listed as its own separate entity, maybe as early as December. I think that's scheduled for. So buying it now and waiting until the separation happens, or just wait till the two businesses list separately, buy it, sell covered calls, not much growth, so it's really stripping the dividends and the call option income out there to deliver the returns. BRG, we've just tracked this one purely from a technical standpoint. It was an algorithm buy signal. We picked this one up by scrolling through the last 7 day signals. And as a reminder, if you've got the technology, what you're able to do there is to click on the watch list, go across here down to recent ASX signals. That shows you the signals from the last 7 days. Click on the first one and just toggle through them. That's a practice that you want to do once a week if you're not following the daily signals. But Breville was picked up through that process there. We had the algorithm buy signal recognize that the price was pulling back and filling the price gap there, and it's found support at 1170 and starting to move higher. So we'll leave that one in play for the moment. Oil Search. So within these energy names last week, I highlighted Oil Search as the preference. This looked oversold. Oil prices have been fairly weak, so it's surprising the uplift that we've seen in these today. The standout's been natural gas. Natural gas has rallied about 20% while oil's fallen. But Oil Search, Santos, Woodside, I think it's worth keeping those on your watch list. Crown disappointed the market last week with its earnings update, but at these levels, the stock trades at about 16 times earnings on a reasonable dividend yield, and I think that the more disciplined approach to running the business on the domestic side should mitigate most of the significant risks in the business. So it looks to be reasonable value to me at these levels. Sydney Airport was one that I highlighted last week as value. Within these yield-sensitive names, you're starting to see it rally from $6.25 up to $6.50, maybe fair values back up to $7 or at least $6.85 thereabouts. That's when you might want to look at selling covered calls over Sydney. Evolution, so gold's been weak, so the rally that we've been expecting in gold hasn't played out yet. Evolution's remained well supported. Evolution's the preference over Newcrest. And you can see there the structure there, the higher high, higher low. So as long as Newcrest stays as long as Evolution holds above maybe this $2.90 level, the picture there looks okay. ResMed, this has really played out as a short-term trade. It just got oversold. We had a buy signal down there at around $13.75, and it's bounced back up. So for the time being, we might just take that one off the list as well, add it to the closed out positions, just so we don't get too cluttered around the opportunities that we can focus on. Likewise with Macquarie, I think I might cut that out of the notes. I don't think there's a current opportunity there. I might put a note in that we're watching Goldman Sachs in the US. So we'll put GS and let's put watching for buy signal in Goldman Sachs. Macquarie, I'll just put closed from Algo. And I'll bring these notes back in the screen at the end. I appreciate you can't see what I'm typing. Of course, these notes will be available at the end of the webinar. Okay, so we've now worked our way through all the general stock commentary. So one that remains on the watch list section of the notes is QBE. So it's still under algorithm sell signals, but what I'm flagging here is the breakout that the stock's had after a long downtrend. We've now got a higher high formation, and in the months ahead, we'll see some level of sell-off here in QBE, and we'll see an algorithm buy signal. I think that could set up a long-term structural uptrend that you want to be a part of there in QBE. So we'll continue to leave that on the notes and revisit that. The yield-sensitive names, I won't bother covering those today, but Centre Group, Transurban, Sydney Airports, they've all done well. Rarely will I comment too much on stocks, or certainly at least buying stocks that are under algorithm sell signals, but Amcor's a unique situation. They've made a takeover bid for Bemis, which is a New York Stock Exchange listed competitor. Hedge funds short Amcor, go long Bemis. That needs to be unwound coming into the shareholder vote, and I think you're in the process of seeing that process play out. I think Amcor trades back up to sort of $14 to $14.50 over the next couple of weeks. So opportunity there. Okay, now we get into the high conviction. So HealthScope was on the high conviction list, and we've had the increased takeover offer, and we've taken profit on that this morning. So for the sake of 5 or 6 cents, not holding in there anymore. URW, this is the Unibail Redempco. I think the market's got too bearish on this, and it's oversold. I think this has upside potential back to around $13.50, $14. Next earnings result as a catalyst will be probably around February, so do need to be a bit patient there on that one. ASX, this is largely played out as we expected. So it's not really so much there's a new opportunity. I think this is a better alternative than owning the banks. Holding this, selling an at-the-money covered call, you generate 10 or 12% cash flow, and I don't think it's got the same downside risks that the banking stock has. So it's just a way of staying within the financial services sector, but diversifying away from being concentrated in the banks. The history here with ASX has done very well off the back of these algo signals, and look, it's expensive, but at a 3.5% dividend yield, 5 to 6% earnings growth, when overlaid with a covered call, I think it justifies holding that. CYB, which is the old Clydesdale, so this is on the high conviction list. There's some risks around this, but they've got a trading update next week, and I think owning it ahead of that's an opportunity. And then you probably want to take profit on a good result because maybe it's not the investment you want to be holding into the first quarter of the new year when the Brexit process really starts to gather steam. But I suspect the upcoming earnings result next week will surprise to the upside, and we'll keep you posted on that via the blog. Medibank Private still believe this is undervalued, so we had this on the high conviction list at around 270. Now trading 280. To me, fair value is 290 to $3, but nothing above that. So you'd want to use covered calls to enhance the returns. CIMIC seen a slight slowdown in the earnings growth in the last quarter, which has put the share price under pressure. But somewhere between $43 and $46, I think that's good value, as is the case with Downer EDI. Downer EDI has reaffirmed they're going to grow earnings at 13%. Could trade up to sort of 750 in a stronger market. Probably out of the two, CIMIC, I think, is the lower risk proposition, especially given that CIMIC you can do your covered calls over as well. GPT we've covered, so I'm going to remove that from the high conviction now. And we'll put that in the closed trades as there's not really an opportunity there. Tabcorps on the high conviction continue to like this. I think the picture, the earnings results over the next 6 to 12 months continue to surprise on the upside. Tabcorp should trade between that 5 and maybe 525 as a target. So that's on the high conviction list. And I'm just going to put a note in there that we think it's going to trade 525. I'm just going to shift Amcor onto the high conviction list. We're going to highlight Amcor. So Tabcorp, we've highlighted that strong conviction there. Sonic Healthcare, I guess putting context here, the earnings have slipped. They were growing at about 8%. Now they're growing at 3%. But the correction from 27 down to 22.50 looks overdone. And I think Sonic can maybe recover back up towards that $24 where you'd want to look at selling covered call options. Ansell. We had this one as oversold down there at 22.50. It was on the high conviction list. We had it marked out as value at around that $22 to $22.50 level. Target here is a pushback up to $24.50 before it runs into resistance. So there's still a little bit left there in Ansell, so we like that. Treasury Wine, I think this is offering an opportunity to the market down here at around $15, so that's on the high conviction list. And Lendlease. So Lendlease has come out with an earnings downgrade relating to their engineering division, where the project has now flowed through to roughly $700 million in write-downs that Lendlease has had to take against the Sydney Tunnel project. The company's response to this is to look at the potential of spinning off that engineering division of the company. It's not a large contributor to their profits, but yet, this exercise has demonstrated the risks where signing contracts to deliver large-scale engineering jobs and bringing those in on budget is a challenging business. And we've seen that over the years with CIMIC or the old Leighton's business, and Lendlease is really, I think, sort of quite embarrassed about the level of, I think this total project only was offering roughly $2 billion of revenue, and they've had a $700 million cost overrun on it, which is quite an extraordinary miscalculation. Now, I don't suspect, they are saying they'll recover some of that from third-party contractors. I think that's probably only going to be minimal. And the best outcome here would be if Lendlease does manage to spin the business off into a separate standalone entity. Either way, they're going to have to take the $700 million loss, which equates to about 40% of their profit over the next 12 months. So whether ultimately they have to do an equity raising or they can cut dividends, but the correction in the share price from 22 down to 13.50, I think more than covers it. So we're thinking that there's value starting to emerge here on Lendlease. But certainly some risks around that. So they're the notes. Now what I want to do is jump into the model portfolio. So we're going to click on model portfolio. We're going to come in here, select ASX 100. And now these are all the stocks that are currently in the that are under algorithm buy signals. And I'm just going to toggle through these and highlight some new names for us to think about where we might look to add them back onto our notes here. And then initially they'll just start by going into the general section of the notes, and then it'll start to look a lot closer at them as to whether they become high conviction ideas or not. Okay, so Adelaide Brighton's in the model. Support there at around 550, but not really one that I spend too much time looking at. AGL, I think, is oversold. Keep that on your list. Aristocrat Leisure, I think this is one that makes it onto the high conviction list. So we'll take that from the general area. And you might just remember there that the notes here were around running a stop loss. So we'll just put in there stop loss, $5 as a reminder. ALS not really doing too much there, but supported around that 775. Ansell, I've covered that, pushing up towards 24.50, and then either take profit or sell calls. Australian banks, ANZ's gone ex-dividend, but I think this counter trend bounce that we've seen in the banks is mostly played out for the moment. The ASX have liked this from 57, pushing back up. I think it runs into resistance at around 63. Probably don't see it doing too much more than that. Lumina not doing there at the moment. Horizon, this is one that I've been talking about for a while. It's been in a long-term downtrend. I think we're in the beginning of a new turnaround phase here for AZJ, so watch that over the next year. It moves into higher high, higher lows. This is the beginning, but this rally fades at around 440. Bendigo, we're seeing this counter trend bounce in the banks, driven by yield support, but I think it runs into resistance. Keep an eye out for the sell signals. BHP, fair value. I think it's reasonable to own that. Blue Scope, keep this on your watch list, and I'll actually add this into the notes just to see if this gets a little oversold. At best, it's on the watch list. It's not really one that we're actively buying at the moment, but the stock has... Let's try this again. The stock has fallen from $19 down to $13.50. So if we're trying to sort of identify a support, probably somewhere around this $13 level, I think gets oversold and you see a bounce there. So I would make a note of that one. Brambles we've covered. Car sales, sub $11.50 as a buy, and I've added that into the notes. Charter Hall, nothing there at the moment. CIMIC I've covered, but I like that from a value proposition. Computer Share I think still expensive. CSL I don't mind, but not really doing too much there. CSR, nothing there at the moment. Crown I think's oversold, but some risks around obviously this slowdown in VIP gaming that's hurting the casino stocks in generally, and we're seeing that as in Macau and also in Vegas. Cleanaway support there at 170, that's in the notes. Dulux, so there's support there at around that $7, stock performing well. Downer EDI, I like this as a long-term growth story, 13% earnings growth, so I think there's no options that you can do over it. Therefore, I like CIMIC as a shorter-term play, but I think Downer trades back up to 750. Evolution, gold's weak at the moment, but Evolution looks to find some reasonable support there. Flight Centre looks oversold at $45. Add that to your notes. GPT, mostly played out. I think that's close to full value. Healthscope's hit our target. Insurance Australia Group should trade through $7.50, so I like that name still. IOOF, not doing there at the moment. Incitec Pivot really hit our target. That was under an algorithm buy signal. It was on the high conviction list, but I think that's full value now. JB Hi-Fi, hard to get excited about retail, but if I had to make a pick, JB Hi-Fi is the preference over Harvey Norman. James Hardie, disappointed with higher input costs, slightly softer numbers with US housing. I think it's still searching for a base at the moment. Lendlease, same thing, searching for a base off the back of this bad news. Mirvac, not really doing there. Medibank, I think looks cheap, should be worth $3. Macquarie, preference there's watching Goldman's, how that plays out. Aurora, not really doing there. Oil search, oil's soft at the moment. Natural gas is strong, but oil search, Santos, Woodside should be on your watch list. Qantas, not really doing there at the moment. Cube, I think this recovery's played out. We had the buy signal there at around 230, but I think it's back getting close to full value. REA Group delivered a good result. ResMed back at resistance. Reliance Worldwide Corporation, just starting to learn a bit more about this business. It's a new entrance to the top 100. Trades at about 25 times forward earnings on just under a 2% dividend yield. So just on the radar with that one. South 32. Preference is still BHP, but this is correcting from 425 down to 350. Maybe if we were to see this down a little bit lower at, say, 330, and I might just shift that down to there as a reference for the next week, maybe down around 330, that starts to look okay value. Centre Group, we've seen comments out of the company about them rationalising their portfolio, spinning off some of their non-core property assets into a separate listed trust. That's helping to get investors excited about. It offers a good dividend yield, 6% yield, put a call option over it, you're getting 10 to 12% cash flow, and I'm not sure US interest rates go too much higher. I think the weaker global macro sort of economy, weighs a little on how quickly the Fed raises rates next year. Seek, I think this is oversold, so add this one to your watch list. I think somewhere down sub $18, that looks okay. For a short-term point of view there, watch these indicators for the moment. The short-term stochastic, which is the black lines crossing up through the slow, whilst that stays in place, you could stay long the stock. If you saw it turn back down, you could get out. That's for shorter-term traders. For sort of medium-term investors, it may just be an accumulation story where you recognise that it's starting to look okay value down there. Sonic Healthcare, I've covered that. I think that trades back up towards $24. Spark Infrastructure, not doing there. Santos, oil's soft, but these energy names look interesting still for long-term fundamentals. Suncorp, not doing there at the moment. Sydney Airports, we've covered, so we like that. Looks oversold. Tabcorp, we like that, pushing back above $5. Treasury Wines, I think this goes onto the high conviction list. So I'm going to take that from the notes, and we're going to add TWE value at 1550. Vicinity, not doing there at the moment. Wes Farmer, so that's one that we've already covered. Whitehaven looks interesting, but not one that we've been buying. Woolworths, I think at around $30 starts to look full value. Woodside Petroleum, again, Woodside Santos Oil Search all look interesting. And then there we are back to Adelaide. So what I'll do is I'll bring the notes into screen. Actually, what we might do is just quickly finish on going watch list. We're going to go down to ASX recent signals, and let's just have a look at the signals from the last 7 days. 40S, not doing there at the moment. Can Group, not doing there. Dexus, Property Trust. Fortescue, just mindful that it's got a lower high in place. Growth Properties Australia, not doing there at the moment. IMF, not doing there. New Century Resources, So what we're looking at here is the signals from the last 7 days, and this is a combination of buy and sell signals. So with a bit more time, normally what I'll do is go in, put the resistance line in place or the support line. So from here, I'd shift this up, and these just give me my reference point when looking at these names. As I go through trying to find. So Ramsay Healthcare, it's under algorithm sell signals, but to me the stock's oversold now. It's got good fundamental support, pushing back up towards a 3% dividend yield. And a little like maybe my comments around Horizon, where I think next year Horizon will start to make higher highs and higher lows and establish a new long-term uptrend. I think the same here with Ramsay Healthcare. So whilst it may be under sell conditions, it might push up, create a higher high. We see it pull back, and in the early part of next year, it'll be under an algorithm buy signal. So I'm going to add that one into the watch list there. And these are long-term structural trends that we're looking to identify, the change in those structural trends, and naturally they don't happen across weeks. You're looking at multiple months for that to play out. I'm just going to put new trend emerging and a question mark there for what we want to watch on Ramsay. Rio, just interesting that Rio's got under algorithm sell signals. So our preference still remains BHP over Rio. Westpac, so when you look back at the history here, it's sell signal. We had a buy, and now it's jumped back out. That trade delivered about a 3.7% return, so not great, but just protecting the position just in case it rolls back over again. If over the course of the next year it moves into a higher low, it'll be added back into the model, but for the moment it's been removed. WiseTech support at 15, but not really doing anything there. There we are, back to the list. So just to bring the notes into screen and recapture, these will be available in the replay, so have a look for the link. There's some coverage of US stocks. Here are the general notes that make their way from this list into the high conviction list. A couple on the watch list where we're looking for structural trends there. Keep an eye on BlueScope at around that $13 level. Could be good value. Probably more... good value might be a stretch, put in context. The stock's probably only trading on a 1% dividend yield at the moment. It got very expensive where it was trading at, but given where it's corrected from to where it is now, I suspect you're getting pretty close to a range where it has a technical bounce. The yield sensitive, we've covered those, and the high conviction. So HealthScope, we get rid of that. That's now in the closed trades. URW, still maintain that that's good value. ASX, I still like that, but that's really played out. There might be a couple of dollars upside in that, but I like that over being overweight the banks. CWY analysts, I'm going to shift that out of the high conviction. I actually, I think simply because there's no covered calls over it. CYB coming into the earnings result, so I think earnings update next week, earnings result next. I think that could surprise to the upside. Medibank still maintain that's oversold. CIMIC, I think that's value. Downer, that stays there. Amcor, I think short covering rally pushes that higher. Tabcorp, continue to like that. Sonic looks oversold to me. Ansell looks like it could push up another $1 or $2. So even if you were buying it here and selling covered calls, I think that makes sense. Treasury Wines, let's highlight that. I think, so let's get rid of the double up there. Aristocrat Leisure, I'm going to highlight that, but also highlight the stop loss that's needed there. And Lendlease looks long-term value, now on offer, but some risks around when buying support comes in there. Thank you for listening in. Hopefully the opportunities in review help you with identifying the areas of the market that we see opportunities within. This will be the last recording for the series. We'll take a break for a few weeks and continue to update you on these opportunities and other ones, all on the daily blog. Thanks again for listening in. And as a reminder, if you would like to become a subscriber and get access to the charts and the signals on a daily basis, then please just call the office on 1300 614 002.